activities. We do breakouts. We do table talk. We do giveaways and bonuses. We'll even have my Vegas showgirls there, so it'll be fun. This one will sell out. I've not done a live seminar in over 3 years, and it's been even longer for Peter. So we are coming out of the enclave to speak to you guys. So Peter's coming in from Canada, and I'm here in Colorado. We'll be going down to Vegas. Post a comment if you want or question, and we'll get to those. Recommended resources, Bellagio, my favorite place in the world to stay away from my McMansion here is, here's me and the president of Bellagio, Randy Morton, great hotel. Also learned from my colleague Brian Tracy on productivity, time management. If you wonder why I'm so productive, it's thanks to Brian and everything I've learned from the guy. So look at his YouTube videos if nothing else, and then go to his site and maybe get some of his stuff. Anyways, a good guy. Last week's webinars, we covered Forex Firepower on Monday, Forex Success Strategies with Peter on the Tuesday the 30th, and the live trading room. Next week, no evening webinars, just the live room. So really good opportunity if you have not yet joined that. We will be covering our markets here in just a second. One of the things I want you to keep an eye out for is on the daily chart. This is our S&P. What a chart. It's been an amazing one-year run. We pulled back and found support at each of the major moving averages here. If you could see, every single time. We lost it temporarily back here in early June, but did pivot nicely off of the nearest 100 moving average line, and we're now at record new highs in the market. Hopefully you've all learned from me. Let me zoom in for you. This process I taught you about with wide range candles. Following narrow candles, we want to look for cut breakout patterns, particularly when they occur right after wide range candles, like Thursday's markets, right? Thursday with a big move up in the S&P. Anytime you see a wide range candle, make sure to look for entries, bullish lower shadows, taking out new highs. It's a good strong market, and so we'll be looking at support and resistance levels for the S&P as well as specific stock charts coming up here in just a minute. We do a quick bit of business here before we do. Just a quick reminder too, my live trading, the open room, we've got a special going. We had 420 people participate in the open house I did this week before last. I've got a special going only through Tuesday. I'm not going to repeat it. My pricing always goes up, as you guys know, like any valuable thing, like valuable stocks or valuable collectible. My pricing always goes up, and I never drop it. Never do discounts or rollback pricing or anything like that. And I don't do second chances or extended deadlines or any of that BS. I'm a straight shooter. Anyway, go to tradingtheopen.com/summer profits. I've got a special where you can get 2 months for just $4.95. So that's over 15 hours a month for each of the next couple of months. And it's a subscription. If you want to stay on with me, you're welcome. We've got dozens of members there. If you want to just give it a shot for 2 months, be sure to try that. It includes video downloads for swing traders, market opens with me, step-by-step live market chart walkthroughs, and more. Be sure to go to this site here. Let me post the. What I want you to do is audit my performance, okay? Don't just trust me. Don't trust anyone out there. Check that I'm the real deal, and look at how well all my alerts worked out for 4 different days. It's a 3-hour video on YouTube I embedded, or if you want the high-resolution downloads, those will be up on the server until Tuesday. So make sure you download those if you haven't already, or if you want to just watch the streaming version here, take a look at what it's like and see how well all the alerts worked out. Some of those were thanks to my traders, you know, like Mike and Tim and others. You guys know who you are, who posted really good tickers for things like QCOR and others that move sharply, and I was able to nail the sequential scaled in entries, both long triggers 1 and 2 as well as short triggers for rollover plays. So we also have swing trade and more for everybody. So if you're not yet a member, there is just 4 days left. And this no BS. I'm not going to extend the deadline because of some artificial reason like my competitors do. You got my word on it. This is the best way to learn how to day trade and swing trade the market. Look at the video for 3 hours to see if it's for you, right? That's a really good way to preview it. And for those of you who are not in the live room during the open house, which I only do once every 3 or 4 months, okay? Next one won't be till end of this year or early next year. So if you're not yet a member, go ahead and join now. Your rate is grandfathered in at whatever you're in at. I will be doubling the room rate to $4.95 per month effective, what is that, Thursday the 8th. So You do have a few more days to register and lock in the rate here. It's only $250 a month. It's $495 for 2 months, which works out to around $250 a month, less than $250 a month. And you have my word, it's 15 hours each week, right? It's or each month. It's the Tuesday, Wednesday, Thursday, over an hour of training, and you get to work with me. So anyway, it's a good opportunity. It's you know, compared to what my seminars cost, this is a bargain. You know, I charge, you know, it'd be something like 6 times the per hour rate, but here you can learn from the convenience of your PC. So anyway, take a look at that. Register this weekend, at least by Tuesday before the special's over. Okay, trading strategy of the week. We're going to look at sequential cup breakouts this morning. I'm going to do that after I cover the alerts. I'm going to teach you how to look for cups at 15-day highs, and the main thing is to set primary and secondary entries after cups. That's particularly effective in a rally market like what we're seeing right here, right now. So I want you to use volume to determine the correct share size to trade. I'll give you some insights on that using a few nice hot movers lately: Qualcomm, Catamaran, and Cena. Anyway, with that, let's get on with it, kid. What's going on with our market? Let's take a look at the broad market S&P. You can see we're taking out new highs. R1, let's use 1718, and R2, let's use 1725. Let's play it tight and aggressive on long breakout. 1718, the gaps over that, pick it up at 17 and a quarter, 1725 on the R1 and R2. Now this is the center line, and kind of price action center line at the 1690. Because we have a bullish lower shadow in this candle here, kind of a hammer pattern, right? After a micro downtrend hammer, it took off to new highs. Let's use 1668 as S1, and I want to use under this 50 MA, which is a smart approach. You don't use right under it. Use a safety buffer so you don't get faked out by a false breakdown. Let's use 1668 and 1635 as S1 and S2 respectively. Okay, with that, let's move on with some of the charts. The first story stock of the week is obviously going to be Facebook. I told you guys about this one earlier, and it has continued to run from my earlier alerts. I told you long on gap continuations, right? We buy gaps up because gaps usually continue to run. Been telling thousands of traders this for many years, because a lot of the moron educators saying sell the gaps up. No, it's not what you do. Professional traders, we buy the gaps up. I told you guys last week this would be a winner, and it certainly has continued to take out new highs. Keep an eye on this one at new highs, roughly 30 to 50 cents above the 15-day high up in the upper right, so 38.8, and I would use again 40.5 as resistance triggers to learn from for Facebook. Anyway, that's the best chart out there in the entire known universe. Next one, INFI. This is one I gave you guys in my live room. I think it was the last week we covered it and the week before. Anyway, INFI, really good mover. Bearish upper shadow. It did recover with a bullish cup and sequential bullish cup breakouts, right? Every time you look for a bull cup, look for new highs above the right side up here. So somewhere over 24 next week for INFI. Keep an eye on that one. Really nice angle breakout and separation from 16 all the way up to 23. So we've got a nice 6-7 point run in INFI. Number 3 of 5 for our stock swing traders is Cena. All things Asia Internet have been taking off lately, and Cena.com no exception, with highs going from 56 to 76. A huge monster 20-point run. So that's cool. Even more cool is to see 2,213 registered today. So that's neat. Thanks, everyone. Record-breaking turnout for the trading industry, so thanks. And I don't have to go work with a bunch of other people. I appreciate your loyalty and being here with me. Anyway, one of the tricks is, at least a good professional trader's tip is, look for box range price extensions to forecast out profit targets on the upside. So what does this move? 60 to 68. Wow, look at that. 68 to 76. Who would have thought? A nice 8-point run on each of these 2 legs of the breakout. So if we forecast, break out your calculators. What's 8 plus 76, guys? What's our exit target on a swing if we buy 76.50? 8 points above 76 is, sorry to have to ask all the hundreds of you here to do math on a Saturday morning, that kind of bites. Okay, 86, survey says, and that's the answer. So 86 exit target on that. Cena.com, huge monster run up. We see bullish cup breakouts continue to lead the way and win the day, and gap continuation runners. Are we hot? All right, next up, SWK. Not as good as Cena, but still worth taking a look at because we have a nice cup breakout. cup breakout, bear cup fake out, moves on up with a gap continuation, gaps continue. SWK, really good because we ran from 80 to 87, so 7-point runner in this one. Really nice, strong move up. We want to see if it takes out the 88 on a continued new high in SWK. Last but not least for our swing traders in the crowd, Yoku, Y-O-K-U. Probably a joke in there somewhere. Anyway, cup pattern continuation runs, guys. Take a look at this one. I like the fact that we've moved up from under 20 finally all the way up to 25. So that's a 20% run in the 25% run in this instrument. Technically around a 30% off the low. Anyway, huge run in YOKU, just ramping up out of its previous, out of the muck here. Now, notice previous resistance, shooting, well, not quite a shooting star, but a bearish upper shadow because the lower shadow is too wide, not 10% or less. Learn more about candles from my colleague Steve Nissen. I know about 5% of what Steve knows. I know how to trade with candles. I'm a professional trader. I use candles, Western technicals, and I'm deeply grateful to my colleague Steve Nissen for teaching me what I know about candles because he's the #1 and only person worth learning candles from. Anyway, take a look at and learn from both of us in our stock trading success system. Anyway, take a look at the cup pattern breakouts. Look at the ranges in here. We've got a nice minor gap continuation runner. This thing went from 19 to 25, so a nice 6-point run in YOKU, which makes for an exceptionally good, strong, volatile, high volume breakout. See, also pay attention to the lower right. My life is spent in the upper right side of charts, but secondarily my eye always flips down to the lower right to see what's volume doing. And volume's at a 15-day high, so that's good. We're going to look at how to trade with sequential cups on high volume breakouts as my bonus topic this morning, so stay tuned for that coming up in just a few minutes. But first, let's now switch over to our day trading charts. My two picks are Home Depot, HD, because look at yesterday. What a monster run. It ran up, you know, at least a couple of good points here. Nice bullish engulfment out of the previous day's closing range, right? That's a first signal point, is mark out the previous day's hour worth of price action. Put your entry trigger, say 8 to 15 cents above it for a day trade. Secondary triggers are right at a breakout above the previous day's high. So if you're looking to trade inside range moves to the upside, it's really important that you look for bullish engulfments where it starts from below this range. See, it's the same thinking of a daily candlestick bearish or bullish engulfing pattern. Engulfments mean that the buyers have come from below and have significantly punched up to new highs. So that's a really good inflection point for trade 1 second is at new highs. So HD, Home Depot. And the other is Las Vegas Sands. I like LVS not only because of the recent uptrend, but because of the length of the runs here. It's moved up nicely off of each of the 2-day patterns, especially out of the congestion regions in the open. So nice moves up. Let's see if LVS gets root and runs up during our upcoming week ahead as well. Now next, let's take a look at QCOR, our gap charts. I've got 2 gap charts for you guys. And we're going to look at our sub-20s, then our ETFs, then our E-minis, then our Forex, then my bonus charts for live room members. So we've got a lot coming up here in the next 14 minutes. QCOR, this is one that in the live room, for those of you who witnessed it live, you remember how well I called long starting at, I think it was 61.30. I had 4 winning long calls in a row in QCOR. And one of my traders had mentioned that for us. It was either Tim or Mike, so I believe it was one of you two guys. So thanks. A lot of really smart traders in tradingtheopen.com. And this is a good example of teamwork. This thing had gapped up. I think it was Tim, if I remember right. Anyway, I had mentioned it, and so I posted 4 winning long alerts in a row in the live room for you guys. That's one definitely worth keeping on the radar for the week ahead to see if we either lose support at 65 or break out above the 71. Day trading, we'll look for ins and outs inside the ranges as well. But anyway, QCOR in play, right? Gapped up from 51 to 60, a 9-point gap, ran up another 10 points because on the count of 3, traders, what do gaps do? They continue most of the time, right? Been trying to teach tens of thousands of traders that over the last 13 plus years. A lot of misinformed educators. Sell the gap up. No, you buy the gaps up. They usually run. Anyway, RGR Ruger, Sturm Ruger, and I don't know what Smith and Wesson is SWC, and that one's moved up a bit too. Anyway, gun makers up as well. RGR, nice gap up. See if it's able to take out new highs inside range for day trades here above the shooting star right there, 54.30. But better play would be to wait for it to break over 55.80. So anyway, RGR, our second gap chart. Now for our sub $20 stocks, how many of you guys traded or looked at paper traded, use only, blah, blah, GDP? That was my sub 20, my one and only sub $20 stock call last week. If anyone took that, you're happy. It ran up at least a few points from where I said the long would be, right? I said, look for longs above the 18. And sure enough, it ran up to, well, 20. Well, let's see if we get more of the same. The reason I posted it as a long last week was because of the strength of this run. It's going to continue to be on my watch list for the week ahead. I'll be looking at longs, at least in my own accounts, over 20 or shorting under 1880. But we're going to see, prefer to just buy new highs, right? Somewhere around 20.3 or so. So anyway, keep GDP on the radar. This is the best that I can find for you guys of the sub $20 out there. It went from 13 to 20. It's a monster run for a great swing trade. The other one, MTG, this is an even cheaper one, but it ran up a good 2 points from 6 to 8, so it's a nice gap continuation, right? Gaps continue most of the time. Let me keep saying that till even more tens of thousands of traders have heard that. Anyway, gaps continue, gaps continue. Gap, look at that, a gap, what did it do? On the count of 3, continue. Okay, anyway, keep an eye on MTG to see if we take out 840, 8.4 in the week ahead, a nice uptrend in that one. For our ETFs, last week I told you guys long XIV. You can see why I've got 2,000 people registered, eh? These are free, and I give you kick-ass alerts that are really, really good. Anyway, good professional term there. Anyway, I'm enthusiastic. It's Saturday morning, and I've got coffee. Anyway, XIV took out new highs. I didn't get my bagel this morning, so I'm running on empty. I'm hungry. Anyway, Hungry Trader Ken. XIV, I told you guys last Saturday long, right? So if you took that one, congratulations. You're in the money. Ka-ching. Let's keep an eye on this one and see if it's able to keep running up in the week ahead. XIV on the radar. The other one, let's add our index leveraged ETF. That would be the ProShares Ultra Qs. That's how you trade the... I like to trade in my ETF trades when I'm trading long, instead of the Qs, which give you the same chart, but less leverage, all right? See that? The Qs, that's the Qs. You buy the Qs when the market goes up. Went from 74 to 77. So that's a 3-point range on a $70 instrument. But if you bought the QLD, you got 6 points of range on a $70 instrument from 70 to 76. See that? Another professional trader's tip there for you. The leveraged on index are good for a rally market, so keep an eye on QLD. That's my favorite index-tied ETF, along with XIV. All right, let's change channels for my ES traders. I post daily E-mini alerts in the live trading room too. So if you're an E-mini day trader, you absolutely need to be in the room. It's mainly for stock day traders. So if you're a stock and ETF trader that wants to trade between $20 and $70, great breakout, strong high volume, high velocity, high volume instruments, then try my room. You won't be disappointed. At least look at the video and see how it worked out. Audit my performance. I believe I'm the best out there in teaching day traders. So, but I'll let all the thousands of you guys make that determination for me with all your kind testimonials. So thank you. Anyway, the E-mini. Let's keep trigger points. R1 is 1708.75, 1708. 3 ticks above that, so 1708.75. The next one, let's use just under 4 handles up at 1712 and a quarter, 1712.25. Those are the two, R1 and R2. S1, let's use 1693 and a quarter. That's support one under this bear cup. If it rolls over and goes short, 1693 and a quarter for S1. And for S2, let's still do intra-range. I'm being aggressive. We got a good market, so either long or short, we play it tight to the ranges. Support 2, let's use 1684 and a quarter. We're still above the support line. Let's see if we can get the trade between 1684 and just over the 1680. So it'd be secondary short. Overall, this is a long market. Gaps continue, right? Gaps continue. So let's primarily keep an eye on 1708.75 and 1712 and a quarter. Now let's change gears here for the benefit of my Forex traders. The single best chart out there, survey says the euro dollar, I'm sorry, the euro CAD, Canadian dollar has been weak lately. So the two best charts out there I can see are the euro CAD is number one. Really nice breakout outside of the previous cup range, right? The obligatory false breakout, and then it runs on up, right? Learn how to avoid these false breakouts. I teach you how to do that in my Forex training for Forex traders and stock trading for my stock traders. And we notice how that resistance becomes new support, and we're off to the races. So the Euro CAD, really good chart for breakouts. The dollar CAD, and I'm in second place. It's trying to climb its way up out of the muck here with a bullish cup inside range break. Not as good as the euro, but still worth taking a shot at if it takes out new highs in the upcoming week ahead. The last one is our British pound to the US dollar. And what I like about this is, who can tell me what this chart pattern is on aggregate? What is this chart pattern after the obligatory Sunday gap? What's this whole chart pattern down here from July 29th until our second? Yeah, Karina got it. And Ray and Mike and DM and Joel and Bo. Hey, Bo. IHS, you got it right. Got an inverted, good. You guys got an inverted head and shoulders. So that potentially bodes well to the upside long. We want to use and congratulations, you guys got it. Smart. I get all the smart traders. That's good. And because there's, I don't know, a couple thousand of you, that translates into a successful business. And for you guys, great training too. So anyway, you can see bullish pattern here with an inverse head and shoulders. Doesn't mean I would be averse to scalping it right under the shadow supports here under 150.6 for day trade scalping, okay? But prefer to just buy new highs above this inverse head and shoulders here. And what do you notice over here? Look at that. That, my friends, is why you don't buy right at resistance, because, gotcha. You run into resistance there, right? So it moves up here, likely chops and drops and take a stop, and you mutter under your breath. That's not good. So you wait for a false breakout filter, and I teach you how to do that in the live room and throughout my educational courses. We always look at avoiding false breakouts by using what I published for many years on as a safety buffer outside of the ranges. Anyway, so keep an eye on that one for potential long. Not a great chart, not as good as the EuroCAD by any stretch, but still worth taking a shot at. So keep an eye on that one, the pound yen, in the week ahead as well. Now let's cover a bonus topic. I'm going to give you a good professional insight on sequential cup breakouts. And it goes a little something like this. Here's how it works. We look for cups at 15-day highs. And what I want you to do, let me do a quick survey. You got hundreds of you here this morning. How many of you use position sizing as taught by my colleague, Dr. Van Tharp, who coined the term position sizing, or you add to winning trades, which you should be doing in a rally market? That's how you make the money, or at least that's how I make my money. Is you take a lot of small stops, but the winners, the ones that really wipe out the goal is to have the winners wipe out the small stops. The way you do that is add on trades, or secondary, tertiary, quaternary, second, third, fourth entries after the first one to capitalize on a breakout. So how many of you, either yes or no, are currently doing some kind of position sizing? I asked our Forex traders a few weeks ago, and I only had, it was like 15%. Most of the people said they didn't. I would really encourage you to learn how to do scaling into trades. I mean, you can get Van's book, Super Trader's Good. He's got a new one about trading down the matrix. And anyway, learn how to do position sizing and scaling. That's really important. One of the tips is you want to use volume to determine the correct share size to trade. So high volume at the sequential breakout justifies higher trade entries, or larger share size, or contract, or lot size, whatever it is you're trading. So let's take a look at some stock chart examples here and how that works. First up, survey says Qualcomm. Now, you know that I'm a big fan of an expert trader of cup breakouts, right? Here's a cup, a minor false breakout becomes support band, a support region. This did a gap fade, pulled right back down to support as anticipated, and took off. Well, the point is, that's a cup. This is a major cup all the way up to here, right? That's cup pattern 1. We buy the highs. Cup pattern 2 is here, And if you scale in, and let's say you bought here and you put a stop there, trade still stayed alive, bought up again here, just chopped a little bit, still alive because we didn't move under a point under the resistance trigger, so that's good. And we have a third cut pattern here, and now we're off to the races, and we've got a really good breakout pattern in Qualcomm. Also, by the way, worth day trading next week. That's a really good range from 65 to just under the 67. So near 2-point run yesterday in Qualcomm. Anyway, look for these sequential bullish cut breakouts and add to those. What you want to do is use the size, the volume as a threshold. So for example, the volume's not slightly higher, but it's not exceptionally strong yesterday, so I would not be adding or have added very large size here. You might do an initial, I don't know, 100 shares there, another 100 shares there, and yet a third set of 100 shares here to scale into a trade on an uptrend. If the volume bars had been way up at, say, 2.5, 3 million, something at least 30 to 50% above the average kind of noise level of the volume, and I might have doubled that to 200 shares. So learning the difference between using volume to gate your own volume in terms of the number of shares, contracts, or lots you trade is another good professional trader strategy. Let's take a look at Catamaran, the ticker is CTRX. Now, I don't have to keep telling you guys gaps continue, right? Okay, you're probably tired of hearing me say that, but there's morons out there telling traders, fade the gap, show the gap. That doesn't end well, Sparky. What you want to do is buy the gaps, because that's what professionals do. That's what I do. That's what you guys should be doing. Anyway, sequential cup pattern. So you get in one. Any of the cups here, I mean, you can draw cup lines anywhere in this chatter. Cup 2, cup 3, cup 4 will be up here if it's able to take out new highs over 58.80. Make that horizontal. Anyway, tear apart the markets like a pro, right? Work it like a boss, baby. What you want to do is get in on strong sequential cut breakouts. That's how you build a trade. And again, I'm not, particularly cherry picking anything. You can, like Yoku, that was one of my week ahead charts. Pretty much any of the good patterns, right? You have a cup, it'll yield entry triggers that are worth trading on sequential cups. So that's your trading strategy tip of the week. I wish you well with it. I hope you do good in your trades coming up. Think about it. Just, use 35 to 50 cents above the cup high. You don't buy at the cup high because that usually runs in resistance. We have bearish upper shadow here, following the window up. So that's why, by the way, bearish upper shadow, that's why it's slingshot back down into the muck here, right? Because a bearish upper shadow, get an engulfment, and it drops right to the support line there, takes out a cut pattern continuation. Wide range candle tells us something good's on the way. And sure enough, we got that gap. And again, if you bought the gap up like you're supposed to, you'd be doing great. So anyway, sequential cups, 1, 2, 3 strikes, and we're in the money. So that's how you trade with sequential cup breakouts. That's our tip of the week. And again, I added these to the mix because traders are asking for not just give me the fish, but teach me how to fish in these Saturday events too. So I thought I'd put in a quick 5-minute strategy point for you all as well. So with that, thanks for being here. I will now open it up to questions and answer some of the questions that have been posted already. I hope that in 30 minutes has given you very good professional, strategic, broad market coverage. I'm a professional trader. I'm Ken Calhoun. I run the original university site for traders, daytradinguniversity.com, and Trade Mastery, and many other sites in my network. So thanks for being here, guys. You've been great, and I will now answer questions. Also, now stop the recording, and I'll get that up for my live room members. Oh, yeah, traders asking, yeah, sorry. Bonus charts for my live room members. Let me go ahead and post those. So the identity of these charts, I always say this is a new feature I just added a few weeks ago. This is chart number 1. And another gap, gap continuation runner. A bit pricey, but ran from 100 to 140. So that's a good 40% ROI in just a few weeks. So that's chart number 1. The ticker of these charts is concealed intentionally. It's only available to my live trading room members. This is kind of bonus charts. So the identity, those are currently in the members area, so you can log into that. Also, too, yeah, I wanted to apologize. Yesterday, our server went offline. my HostGator and the Bluehost server network of families, tens of thousands of sites went down or intermittent yesterday. So if you had a hard time getting to the Day Trading University site, that was why. It had a rare outage as they were migrating servers to a new server in Utah, a server center. So anyway, that's chart number 2. Okay, that's chart number 2. Here's chart number 3. Look at that one. And these are my very best charts, and they're only for my live trading room members. So if you're not yet a member, that's another enticement to join. Now would be a wise time before I double the price permanently come Thursday. I do that because I can, because the demand is super high. I get a lot of traders. I inherit all the a lot of traders from my competitors after they're fed up by being fed bogus stuff, by overpriced things from people who don't really trade. So thank you for your loyalty and for being part of my family here. I appreciate it. So anyway, that's chart number 3. Chart number 4 is this one. I don't like the antecedent chop, is earlier chop, but I like the big high volume close and high volume price spike the last couple 3 days. So that is chart number 4. And here, a cheaper one is chart number 5. A sub 20 ran from 12 up to just under 15. What I like is the strength of the gap up continuation, uptrend in this. So that is chart number 5. Okay, and with that, we'll return to our regularly scheduled programming with our S&P chart and more as we get underway here with Q&A time for active traders. Daily chart's been especially strong here lately. We'll see again. Remember to look for these wide range candles because usually you get buyers after those. It's a good momentum candle approach. Been teaching traders how to do that for years. You look for a series of narrow candles like I told you last week and all throughout the last year, and then a wide range candle. We look for price action breakouts beyond that. So it's a good momentum trigger for active traders to use as well. And again, this special will not be repeated. The countdown timer says we've got 4 days left. I put a lot of work into my websites. I do all the site design myself. So in addition to trading, I did all the graphic design. I do all the video production, do all the copywriting, all the technical stuff, all the customer support. That's why I'm not charging $5,000 like my competitors do. So it's a bargain. Just $4.95 for 2 months of 15-hour months, right? You get it's a total of 15 hours each month. So that's 30 hours of professional training with me for $4.95. If it were a live seminar, you get 16 hours for $1,500 or $14.95. So this is a bargain and a really good way to learn how to day and swing trade. Take a look here, though. Before registering, I encourage you to take a look at this 3-hour video or download these, which add up to 3 hours of video. I just kind of put them together to make this one, and you can see how well all my alerts worked out. Compare my performance with anybody on the internet. I believe I had the very best calls in the world for active live day trading. I really do. There's some other good guys out there. There's two other places out there, not my direct competitors, but really good people out there that run live rooms. They're okay, but I still think I'm the best. So compare my performance with anyone's out there, and I think you'll see why the room has been so popular with so many traders around the world. You get all these things. And that's it. All right, questions. Let me see what we've got here. Let's see, a question from Cheryl. Hi, can a pre-market, if you see it spike low like Qualcomm did on Friday, does that usually mean it's going to test that low? That's a good question. Let's pull up the chart here. Remember, guys, that's why, and ladies, that's why it's important to have your pre-market charts. What you look for, the number one pattern when you see a low that starts to trend up in market, like this one did, is look to see if there's an engulfment. That's just a good, bullish engulfment. It's not a classic bullish engulfing pattern, but it is something that starts from below. There's another chart like that earlier. Remember, starts from below. If you start to get upward momentum, you don't want to mess around with it trying to guess at a trade inside this range. You wait instead for anywhere from, say, 8 to 30 cents above the high of that closing range. So it's a closing range. This is also, see, an open range breakout would be, again, open range breakouts were coined by Tony Crable, a commodities trader. He's the person, not certain other people, who invented that term. Well, anyway, you could see a bullish engulfment. So this is a kind of after closing range breakout that took out new highs in a really nice wide range. So You don't trade down there. You don't guess. You don't guess. You wait. Good trades are late to enter and fast to exit at the first sign of a pullback, right? So that's a likely good professional day trade round trip would be here to there. You don't get down there to here. This is a big enough pullback that would get me out, right? You have two red candles and takes out new lows. It's an engulfment, though, so that would be the first long. Slow to enter. Okay, we didn't catch the bottoms here, but we also didn't get stopped out on other charts that would have been choppy down there. So you wait for selective strength on high volume to confirm it, and that's a good long. So yeah, that's the pattern. The only thing that, so to answer your question, the only thing that I would look at for a low is if it opened and it did pre-market down here but took out new lows in either a pre-market bear cup here before 9:30 or post-market during the first 15 to 20 minute bear cup here. So that would be a pre-market bear cup, didn't see that, or an in-market bear cup, didn't see that. So that would not be a long play until you see a loss of new lows with that kind of pattern. So hopefully that answers. But yeah, that's a good question, Cheryl. Thanks. Let's get smart questions for people. Hey, thanks, Padma. Good to hear it about invitation from the Money Show Expo and the prize. Terry, roughly, what's the cheapest stocks I like to trade? I will trade the cheapies. I used to trade, what was it? Zales was one, I remember, looking for a comeback and all that. But those usually don't do much. The cheapies, on a regular basis, that did move up. See, I knew Zales was going to run. Here's the 3 year. Zales have been at the 5 year. Zales have been, hey, why not go for the 10 year? Zales have been up here in the 30s, moved down here, and is now coming back, right? It's been a really strong last 3 month runner. So that, you know, is okay. But still, these are tougher and the leverage isn't as good as some of the others. So minimum, as a rule of thumb, is 20 a share. I prefer instruments that have good, strong momentum runs like Cena.com, because those are easier to get right. I mean, I like to, I don't know about you, but you know, my goal is always to make as much money as I can in my trades, and I found that the cheap instruments do badly for me, much higher percentage, much more false breakouts and chop and washout trades and false moves and head fakes and all the rest of it. It's much easier to just avoid that noise and trade the strongest signal charts like this one, right? This is a good 20-point runner in Cena. Those are the type of charts you want to be on top of as a trader. Much easier to trade than other instruments and other patterns. So yeah, good smart question. Question from CP, is my pacing as fast as I do in the open house? Yeah, that's how I talk. I'm a trader. I'm a day trader too. I'm not, well, look at the moving average and, oh, look, it's a stochastic and a Bollinger Band, and wait, no, Sparky, I already just made 2-3 trades. I'm in and out, so you know that's how a day trader works it. Let's see a question from Karina about, do we do the 30 to 50 cent above 15-day high due to a pullback? No, you just want sequential breakouts. You don't want to fool around with pullbacks. You want sequential breakouts. So a question about Baker Hughes, BHI. No, that's a horrible, awful, nasty chart. Just say no. Stop the madness. That's a horrible chart. Why in the world would you trade something? I was not to jump on you, but traders always ask me about crappy charts like this that you shouldn't be trading in a bajillion years. What's better, that one or this one? Oh, let me go for this one. What's better, the steak or the moldy hamburger? Give me the steak, baby. I'm a surf and turf kind of guy. So anyway, better charts, strongest patterns out there are the type that you want to focus your energy on as a trader. Keeps your life easier. Don't trade stuff that's down in the muck. We trade things that are in good, strong breakouts at the upper right side of the chart. I'm a professional breakout trader. It's what I do. So anyway, yeah, but good question. Hey, smart question from Chris. Do I still consider gap continuations if the open is greater than the close? No, no. You want to buy. So what you're asking is something like this. Here's a gap where the open is greater than the close. No, you just want to set your trigger at above that gap high. Okay. I mean, this one still would have worked out if you'd bought it, but in general, I'm an in-trend directional guy. So if you have a gap up that does a minor bounce and finds support, you still, I mean, you could have bought it there, would have worked out. But me, I wait until things get stronger, say over there. That's the kind of trades I do. So I mean, experiment and test. It's a smart question, but I prefer new high breakouts myself. Hey, Don's asking about the gap in SanDisk. No, that's a horrible, awful. I mean, that's okay for day trades. Yeah, that one's fine for day trading. You got at least 30 cents to run in a row. But who can tell me what's the wrong problem with this chart? Why is that raw like sushi? Why do we want to stay clear of that one? It's because it's in the middle. It's right at resistance, right? An obvious bear cup resistance. So that didn't end well, right? If one tried to buy here, oops, that didn't work out. Buy there, oops, that didn't work out either. The reason is because it's in the middle of the chart. Remember, guys, you only want to trade stuff that's in the upper right side of the chart, like Nike's, just doing it. Not one of my calls, but oh, that'd be good for day and swing trading, actually. So add that to the list, Nike. Anyway, I just randomly pulled that one up. Cup breakouts at new highs, that's how you trade. You don't screw around with stuff inside the range, because oftentimes you buy it, then you get stopped out only to miss a big run up. We've all done that. It's frustrating. So don't screw around with stuff inside the middle of a trading range. That's like the equivalent of a doji. The price action is not sufficiently strong yet. Even if it is going up a little, that's not good. You wait for, patiently, wait for new highs. Kind of like playing poker. You know, if you're at a casino, and I like to play poker in Vegas all the time, you may do, 3 to 5 hands an hour, okay? If you're careful, tight, aggressive, well, if you're tight aggressive, you might do a dozen hands an hour, but you spend a lot of your time folding bad cards in poker so that you can have a shot at it when you make the flop or the turn or the river, and you stack them all out with pocket aces and take their money and make them cry like I did. Well, I didn't make them cry, but like I did in Vegas at the gym. I like the poker room there in Venetian and Aria, but my point is patience. Don't overtrade inside range moves because that usually ends badly. Wait for the upper right side of the chart. That's what you always want to be focused on as a traders. Things that have nice, strong, clean trend lines, like the Cena chart. I mean, I'm just picking Cena out of the bunch because I don't know, that's the best chart. Or Facebook's another good example. The upper right side of the chart, that's where to play. That's where we trade, is up here. So yeah, good question. A question from Steve about in my swing stocks, what's a typical holding time? Well, anywhere from 2 to up to, in this market, anywhere up to say 12 days, 2 to 12 days. Typically, I've said 2 to 10 days, but because the market's at new highs, record new highs, you could see up to 12 days out of the 15 is good. Now you can see here, see how the sequence, this is a classic. Who can tell me what this 3-candle pattern is? And for more on these, read my colleague Steve Nissen's book, Beyond Candlesticks. Magnificent book. He's got 17 pages on this pattern. What are those 3 candles? The 3 green candles in a row make what? Larry, Moe, and Curly. Papa, Mama, Baby Bear. That is a 3-line break, and it's an exhaustion pattern if you have a bearish upper shadow and the whole real bodies are getting smaller as these are. So that's an exhaustion 3-line break, and that's why it drops. So just another quick candle tip. Look for exhaustion sequences like this when you're looking whether or not to buy. Or you see a classic shooting star there, right? And it dropped right back down, bounced, did a bullish cut breakout, but since that wide range candle got smaller and smaller, that told us we'd get into another exhaustion play. So again, learn how to trade professionally. It's all about the details, right? You don't have to spend too much time with it. I mean, kind of like that's it, and I'll buy new highs, new cut breakout highs, but learn how to instantly read these charts, like a pro, like a mechanic, and figure out how to make your trades work from there. A question from Greg. Initial stops. For day trades, it's anywhere from 8 to 40 cents. Usually 8 to 10 cents is where I like to use. For swing trades, no more than 1.5 points. Typically 1 point for things under 50 a share, and 1.5 points for $50 to $70 share instruments. See other questions? From Mike, yeah, I showed several. Yeah, I showed the pound yen. I also showed the euro CAD and the dollar CAD. The euro CAD is the best chart out there. It's the strongest momentum breakout. The the pound yen, not quite as good because it's coming up off of its lows, right? But yeah, that was a head and shoulders, inverse head and shoulders here. So because of that 2-day strength, that may slingshot it up into the range, but that's not nearly as good a chart as the Euro CAD because it's escaped its range, kind of like a rocket ship escaping the Earth's gravitational force. I'm a sci-fi fan, so moves to new highs. And my thanks, Mira, saying amazing. I do all this myself. Yeah. Empowered by Brian Tracy. I learned how to be extremely productive and, fortunately successful. Yeah, thanks to what I learned from Brian. It's all about time management and focus and having specific goals that you work towards and making things be an intensely action-oriented person so that you're working really hard on things that count, that really help people. And that's, why I've got the numbers that my competitors don't. So that's always kind of a cool thing. I've got some movie and music picks for you guys to wrap up this morning session too coming up. I want to answer your questions though. Any other questions? Hey Stan, how you doing? I remember you saying, hey, as a longtime trader, what's my opinion of the overall market? Frankly, I'm just surprised that it's continued to run up. I was looking for potential reversals off that earlier one, so that's why I just trade the directional trend. I learned when I forecast, things usually don't do the forecast direction, so you just trade new high breakouts. But looking, whenever we're at multi-year all-time new record highs, common sense says we want to keep being buyers. But I think we're going to run into, here's a good price action technical pattern. There's two signals that tell me we may be due for some selling momentarily. So tighten up trailing stops on all open longs is a really important strategic point. Probably should have said that at the top of the hour, but anyway, look at the number of days it ran up. Look at the number of days it sold off. Look at the days of number it ran up. Trade, Jane, trade. Watch Jane trade. What do you think might happen next? A sequence of about yay many days, followed by a sequence of the exact number of sell days, followed by a sequence of the exact number of buy days, with a smaller, even though it's a bullish pattern because you got a bullish lower shadow, it's a smaller whole real body candle on Friday, not too much to be worried about, but still, we may be due for a pullback or a reversal of fortune soon, right? Because of the cyclicity of this. We have a cycle up, cycle down, cycle up. We may get another pullback cycle, which would make sense, right? When the market, be a, like a student of human nature, like I've been for my life, be a student of market and price action patterns. And what you notice about all three of these is that they're about the same number of days. So I'm always a time-focused trader. As a jazz musician, I'm always focused on the beat and timing. So this is like a whole note, maybe almost a dotted, not a dotted whole note. Let's say a quarter note, a dotted quarter note. With the 16th there, we may get a rest and it may pause and drop. So anyway, it ran up this many days, sold down this many days, ran up this many days. I'm still not long. I'm long my markets, long in my positions, but I'm tightening in trailing stops because of the fact that we are likely to time exhaustion, right? A cycle time exhaustion pattern in the S&P. So because of that, I'm going to be cautious up here. The air's thin up here, so start selling if we lose the 1700 and use the previous support triggers identified for you earlier in the broadcast as well. Karina, how do I scan for these? Very carefully. I just go through, sometimes I'll use the leaderboard scan and then I populate my quote box with ones that are over 20 a share that have, the heck is that chart? That looks like an IPO. I don't touch those. I'll look for instruments that are over 20 a share in the leaderboard scan and e-signal. I'll use the percent gain, percent loss, the short-term ups and downs. I'll use the 52-week yearly highs and lows scans, and those tell me some of the things to look for, as I add those. And I do that in the live trading room for everybody too, so that's a good place to learn how to do that, is a trade in the open. And yeah, Brenda, I like to scale out before earnings announcements. From Don about Tesla, had been electrifying earlier. Boom. It still looks great. It's a good chart. We'll see if it's able to take out the 140 coming up. We have, again, all these classic inverse head and shoulder sort of type pattern. What I don't like is the bullish cup did a false breakdown or false breakout and broke down and then took up to new highs. So still looks good though, right? We have an ascending triangle here. Ascending triangle may break to new highs over the 140. So Tesla looks good on new highs, but I'd wait until it breaks the 140.5 myself before adding to or scaling in. All right, Eli, from the pullback in the S&P or the SPY, you're right. All right, good points. Hey, let me give you guys some bonus stuff to listen to over the weekend. There's some suggestions. and then we'll wrap up for today. Thanks for being here. So that concludes this week's official Trading Week Ahead live webinar. See you next week. Here's to your success. Clink with the crystal or the Dom. Anyway, music to trade by. Just a reminder, I've been a jazz musician over 35 years playing alto and keyboards and whatnot. Anyway, timing and urgency, pattern recognition skills, volume and tempo pace, being in sync with the market. Listen to your favorite music this weekend. I'm curious too. I got all these hundreds of new traders. What's your guys? I know I've asked this for a year now, and I'll do this music bit, once or twice a month. This is kind of an added bonus here. But what's your all's favorite recent song that you listen to? I listen to music constantly. I watch music videos all the time. I play music daily. I am a musician. I love it too much to do it for a living. So I put myself through college with it, but I like music too much to make it something I do for money, so I like to do it for fun. And I live for music, and the timing and the pattern recognition skills that you build as a musician, at least it serves me very well as a trader. I've got the world on a string, and I've got different genres that I cover each time I do one of these. I've got the world on a string by Sinatra, Kiss of Life by Sade, new release by FX called Rum Pum Pum Pum, a good K-pop song. FX is one of my top favorite K-pop groups, really good. Look that up on YouTube and watch all their videos. Outstanding. Highly recommend. I watch those all the time. Hotel California, a classic by the Eagles. Walk Like an Egyptian is our favorite 80s song of the week by the Bangles. I never get tired of listening to that. It's a funky music video is pretty good too. Classic Jazz by Cab Calloway. Minnie the Moocher. That's one of my favorites from the 30s. And by the Police, Message in a Bottle. Still one I listen to this day. Movie of the week. Wesley Snipes takes on the vampire hordes in the Blade trilogy. I watched Blade Trinity the other night. I like that one actually, but the first one's a good one to start with. And Blade was good. So anyway, that's some TV shows, some music.